Hello, everybody. It's Simon Dixon here. I'm very happy to have finally got back into my home, and I'm feeling very privileged because there's a lot of people around the world that are in very unfortunate situations. Sometimes I found myself complaining because during this outbreak, I engaged in some very aggressive building work, which turned our house upside down. And just was complaining a bit to myself about the unfortunate timing. But then, what can I complain about? There's so many people in so many worse situations. So I'm back to the old phone, holding up the phone and Twitter. And currently on lockdown, haven't managed to have a haircut or a shave. Just been dealing with taking in the situations as others have. Been releasing a lot of content on what's been happening, and my goal is to keep you informed on the commentary about what I think happens next. So, a lot of people will be dealing with a lot of things. My thoughts go out with you if you, your family, or your loved ones have been affected by this health crisis. My job is to help you navigate the financial crisis, which inevitably follows. So I'm going to give a quick update and just have a little wander around at the same time. So my goal is to just kind of, a lot of you would have been hearing these different terms, and I've been giving lots of videos and lots of AMA, but I just want to really deconstruct some of these things that have happened. So the first thing is quantitative easing. So what is quantitative easing? For those of you that don't know, quantitative easing is the process of a central bank creating money, which are just and it's very misleading. People think of printing; they always talk about printing money. It's not printing money. Printing money is the process of creating, digital, non-digital notes and coins, and that is actually created in a very different way. And the reason that it's not just semantics. Printing money normally means that the government creates the money. So when somebody issues, a new $10 note, when a new $10 note comes into existence and is printed, it's actually called seigniorage, and seigniorage is the process of printing money at very little cost. So it costs approximately 3 cents to print a $10 note. And there's $9.97 margin in that process. That $9.97 margin is added to Treasury's balance sheet, which means that it reduces the amount of tax one needs to pay in order to try and meet some of the government's obligations. So the government benefits from it and is completely debt free, whereas quantitative easing is very different. Quantitative easing is where the central bank, and in the case of the US, it's the Federal Reserve, and the Federal Reserve is not a federal institution; it's a cartel of private banks that were that founded the organization in 1913, and it has a special relationship with the government, but it also has independence and is not actually federal. So the Federal Reserve, when they create money, they don't print money. They simply enter a new digit on a computer, just like you might do with your computer. um, and that new digit on a computer, which is known as the Federal Reserve's balance sheet or their reserves, is used to purchase assets. So essentially, imagine if you could just buy government bonds or stocks or corporate bonds with money that you just essentially created out of thin air is the reality of it. But the difference is that money is created. So the Federal Reserve has the authority and power to create that money. And then when they create it, they use it to purchase assets. And the goal of purchasing assets is to try and stimulate economic activity again, which is one of the manifestos of the central bank. Now, every central bank is slightly different. I just talked about the Federal Reserve. The first central bank was the Bank of England. It was created in 1694, and it was funded in order to make loans to the governments to fund wars. and central banks since then have been, it was a private institution then, but over time it was nationalized to different degrees. So anyway, quantitative easing is the process of the central bank creating new digital currency. So it's a digital representation of the dollar, the pound, the euro, whatever country you were in. And it's not actually printing money because the beneficiary is the Federal Reserve. And so when it purchases these assets, then one of the primary assets that it purchases is government bonds. And so government bonds are financial products that governments use in order to borrow money because they don't tax enough to meet all their obligations. So they borrow it instead, and they borrow it through the bond market, which is simply a loan that pays a fixed coupon and interest rate to those that lend the money to it. So the Federal Reserve then lends the money to the government. Now, the government has full authority to create as much money as it chooses, but instead it borrows the money, which creates a more inflationary, inefficient way of actually creating new money than it needs to, when it tries to meet its obligations. And in times of a health crisis, when the obligations are the entire economy of the world, you end up with emergency measures where the central bank essentially just creates the money and lends it to the government. Now, that does pose the question, why don't they just create it direct? Which is a very good question that we've been debating as monetary reformers since I've been looking at the science of money for the last 20 years. And that's the right question to ask, rather. But that takes you down the rabbit hole of money creation that I've been going down. So that's quantitative easing. Essentially, that gets billions and billions and billions into the economy. Now, what they do is they lend it to the government, and then the government can then decide how they want to spend that money. And one of the ways that they're spending that money, and the other part of quantitative easing is used to buy corporate bonds and companies that can then borrow money on the bond market and then use it to buy back their stock if they're public credit-worthy companies, which then creates an illusion of stock market growth, which is what's been happening over the last decade or 10 years. So once the government then has a bunch of quantitative easing funds and essentially if institutions stop lending to the government, then the Federal Reserve lends to the government, then they decide what to do with those funds. And one of the things that they're doing is helicopter money. And again, I'm just focused on the US because it essentially is using most monetary tools compared to other central banks. And so helicopter money is the process of the government's balance sheet this time rather than the Federal Reserve's balance sheet. And there's a choice, and this is a very interesting question as well that people aren't really asking. Is it going to be a Fed account, which means that it's everybody that gets this money has an account with the central bank, or is it going to be the government distributing the money that they borrowed through quantitative easing? The flow of funds becomes very important in understanding these things. And my goal is to try and deconstruct it in simple English so that everybody can understand and make decisions around that. So one option is to have an account with the central bank. Now, this is what I've been forecasting. I think I talked about this in a video. The first time I mentioned it was about 6 years, but on my YouTube channel at Simon Dixon, I've been given lots and lots of videos of exactly how this could plan out and how a central bank would probably create a digital currency in a time of crisis in order to deal with a systemic risk event. Now, at the moment, so this then moves from quantitative easing being a monetary stimulus, a monetary policy, to governments deciding how to spend it, which would be a fiscal stimulus. So if the Federal Reserve or the central bank is the one that has the account, then this is actually an attack on retail banking, which is why it got so much resistance when it was proposed that the Federal Reserve should issue a digital currency direct from the central bank, and the recipient should have an account with the Federal Reserve. The bank lobbyists obviously don't like that because that is an attack where the retail bank is being attacked by the central bank. This is actually my proposal of how you actually remove too big to fail from our system. If the central bank can allow people to have accounts with the Fed, then you create almost an insurance policy for the financial system whereby a government can go bust and consumers don't necessarily need to lose their money as it would happen if a bank went bust right now. Now, obviously, if you own less than the federal insurance scheme, then your deposits are protected by the credit rating of the government. But the credit rating of the government is also called into question in such times. But if you hold more than the insurance amount, then it's not protected at all. And we've seen in situations like Cyprus where they can, during the last financial crisis, that they can actually bail in and use those funds to recapitalize the bank. So anyway, helicopter money is the process of getting money. It could be the Fed's money, the Fed's balance sheet, in which case that is a more sensible approach, I would say, because it means that there's a protection from too big to fail. And I think the protection from too big to fail is actually going to be needed in the months ahead as a result of these unprecedented measures that have had to been taken in order to overcome this catastrophic health crisis. So what have we got? So we got helicopter money. Now, the government was talking about sending out checks, which is a crazy way of doing it. They can just simply airdrop the funds. And the government also has full authority to create that money if they choose. There's no reason for them to borrow it off the central bank. And there is precedent for that as well. In the American Civil War, in America, actually, the government actually created their own currency called the greenback, which is debt-free money. They didn't borrow it from the central bank. It's just debt-free money that they injected into the system, and in a crisis wartime. Now, the banking system obviously doesn't like that, and there was massive wars and fights around who controls money. It was a very prevalent debate at that time. We forget about that because we've just kind of sat upon the system that we have and forgot to debate it now due to the mass complexities of how our financial system has worked and evolved. And so that's helicopter money. And then the other thing is interest rates going down to zero. So this, again, is a monetary policy. I'm just going to have a wander around to keep up a bit of exercise in this lockdown. Sorry if the camera gets really shaky, but I'm going to do a few more like this, and I got a bit of time to pull out the equipment and see if I can get better than just simply holding up a phone. But I'd rather get the content out to you than get the quality. Before all this craziness, I did have a studio coming on the way, but God knows what the scenario is with that right now. But as soon as that arrives, then I'm going to have a professional studio set up for future videos to get the sound good and the production value better and no shaky camera. But I'll still try and do these because I like to do it in this format, really. Okay, so yeah, the next one is interest rates going down to zero. Interest rates going down to zero, exposing the fact that governments, when they want, the way that they run the economy is that it's all done through debt. Because if you've watched any of my other videos, you know that all digital currency created by a private banking sector is essentially, the governments have outsourced the creation of digital currency, with the exception of quantitative easings, to the private banking sector. And the way that it works, this becomes really important in our next policy. It's a bit windy up here, so I think I'm going to go back to where I was. This is probably messing up the sound. This becomes really important in your understanding. So the way that money is created now is that when you go to a bank and you borrow that money, new money is created by the private bank. It's not somebody else's savings. And what we've seen is that another policy that's been implemented is removing all reserve requirements from banks so that they can create unlimited money for those that want to borrow, which is an interesting scenario The removal of fractional reserve banking, essentially. Let's just take away the reserve, and let's take away the fraction, which has happened already in many financial systems. But since the last financial crisis, there was lots of regulatory reforms to try and re-implement a fractional reserve. Anyway, where was my trail of thought? Yes, so the way that money is created is that when you borrow the money, they issue a new digital currency, a digital representation of the pound, the dollar, the yen, whatever it is you're borrowing in, when they do that. And so that becomes the new money supply backed upon your loan. Now, the money disappears if you default on that loan, and the money also disappears if you repay that loan. So, and most of the loans are made through the mortgages. This becomes really significant. This is an important concept to understand in terms of understanding what might come next. And so, so mortgages are the number one product, which is why people have always invested in mortgages, because the bank can repossess it in times of somebody defaulting, and the property or real estate doesn't run away. So it became their favorite asset class for creating new money every time they issue a loan. And then the government gave stimulus packages where they said, people can get, this was the last financial crisis, people can get loans backed by certain quasi-government institutions. Therefore, people started to get commissions, and they started to sell it. They started to package those mortgage ups into product. Then they started to sell it to your pension fund managers, and essentially, the money that you were pooling together was used to buy these mortgage products. That meant that the institution that was lending, the bank, essentially was one step removed from actually needing to repay it, because they could sell it on to your pension. And therefore, we had the removal of, responsibility in subprime loans, because no one really cared whether the mortgage could be repaid or not. They just cared about the commission and the ability to sell it on through an investment bank. Sorry if I'm going completely off, but I'm just covering quite a few topics that I think become relevant in understanding where to go next. The final tool, I talked about it. So we had quantitative easing, which is the central bank. Then we had helicopter money, which is the important is where does that money come from? And the third one is interest rates. Now, why did I talk about all those things? Well, because the way that the central bank, through monetary policy, decides to try and control how much digital currency your retail bank lends is through the manipulation of interest rates. And what they do is essentially, in times of hardship where they want you to take on the debt, they put the interest rates down, and even to negative, to try and get people to spend, because it costs them on their savings. And so when you do this, it's trying to get people, essentially the banks, to create new money, issue loans, because they outsource the ability to create this digital currency backed by debt to the private banking sector. And then once enough people borrow it, this thing called inflation comes along, because I personally believe is factoring in all the interest repayments and inefficiencies through the way that the system creates money now. Other people think it's excessive government printing, but it's not the governments that are printing normally in times of like this. And that debate has always been debated in economics about the real cause of inflation. And how to counteract that, and that is essentially the job of the central bank. But when they put interest rates up, they're essentially taking the same people that borrowed the money and trying to send them bankrupt so that they can no longer repay their loan, so that it cools down the economy, and then the prices cool down a little bit. And this is what's called the business cycle. It's essentially a crazy, insane way of managing a money supply. But because the government have essentially outsourced it, it's actually a free market solution to money creation. You give a bunch of private institutions the ability to create money and allow them to compete in the banking sector globally. And so this is a free market solution to money creation called fractional reserve banking. It's less free market because the there's lots and lots of crony capitalism involved in securing a banking license, as we've experienced over the last 15 years of trying to create a non-fractional reserve bank, Bank to the Future. But that's a different topic. So that's why now, when interest rates are at zero or moving towards negative interest rates, you essentially remove monetary policy from the equation. And that's why you have desperate measures like quantitative easing in times of health crisis like we see today. So what happens next? Well, the world is on global lockdown, and we're all working together in order to try and overcome this health crisis. And everyone's trying to do their part and figuring out what they're going to do. But the reality is that helicopter money is going to come out, and the people are going to decide what to do with that money. And sorry, again, this isn't a global thing. This is different governments, different policies, but I'm just taking some of the scenarios and trying to condense it down into something understandable. People are then going to decide what to do with that money. I think that they're going to do a couple of things. Due to the record levels of uncertainty in this health crisis, they're probably going to want to withdraw it as cash. Now, if they withdraw it as cash, that's going to create essentially, if a lot of people want to do that, the cash does not exist because it's digital currency created at a bank. Remember that I talked about when the Federal Reserve or a central bank prints money, how do they get that to people? Well, what they do is they sell it to banks. So remember, it costs them 3 cents to create a $10 note. They sell that $10 note to a bank, and the bank puts it in the cash machine in order to try and meet some ATM liabilities. That is a seigniorage income for the government, selling those notes. And it's a power they have full authority to exercise. But instead, they give that to the central bank and the private banking sector. At some stage, I do believe that there will be probably a lot of people wanting to get some cash as a result of that. That is going to create a lot of media attention that will create probably lots of people queuing with social distancing at their cash machine. And that could potentially create some kind of exposure to the financial system. I have been talking all along, for those of you that have been watching all my videos, that there will be some kind of systemic risk event that exposes the weakness of the financial system. The other thing that I think they will do is they will probably say to themselves, I'm not going to take all of that money and put it into my mortgage. And so I think that there will be defaults of mortgages. And this is the nightmare scenario that the government essentially want to avoid and should try and avoid, because a bank going bust in the current system is really catastrophic. But the good news is that you can replace bank deposits through these extreme measures so that people don't lose money, but the bank still goes bust. So I don't want to create more fear and uncertainty in a time of massive anxiety that people are experiencing right now. But there are definitely solutions thanks to digital currencies, so that to ensure that you don't necessarily end up losing your funds, but the bank still can go bust. Because remember, I talked about, if the Federal Reserve is doing the helicopter money, then that's central banks competing with retail banks. The government could give everybody a digital wallet. They could log into that, and if you had money at your bank, you now have money at your Federal Reserve account or your central bank account. In previous videos, I've talked about why that's going to be a not very nice form of money, but now is not the time to think about these things. This is, really radical financial reform that needs to happen to ensure that everybody gets past this health crisis in these times. Now, yes, so when people default on their mortgage, remember, as I said, the way that money is created is that when someone defaults on their loan, it reduces the money, it destroys the money, it disappears. The money disappears because it never existed in the first place. So that exposes a banking system. And really, I think that that is going to be the event where the government or the central bank decides, screw the banks, we'll let them go bust, but we'll ensure that we create enough money. And by the way, if you replace that debt money with another form of money, that's not inflationary money. Quantitative easing is inflationary money. That's new money introduced into the system. But replacing debt-based money with debt-free money is not inflationary. It's essentially taking the existing money supply and replacing one form of money with another form of money, and removing the inefficiency of the fact that it was created of debt and all the interest repayments that occur. Now, that's going to create big effects on different financial markets. It is radical banking reform. It was one of the reforms I talked about when I created the book Bank to the Future, Protect Your Future Before Governments Go Bust. Started writing that before Bitcoin was created. And again, this isn't a pitch to go buy the book or anything like that. People have got much, much more pressing things. I'll keep creating the content on here so that you can get that for free. And at some stage, maybe during this lockdown, I'm going to figure out how to give that book away for free, because I don't even care. You know, I don't receive money from that. The publisher does. But let's figure out how to make it digital and free. That's something I'd like to do. So again, don't take this as me trying to push you into buying a book or anything like that. We've got better ways of getting you the information in the future. So the things that I'm looking for right now, and the things that is the fact that I think that people are going to want to take some cash, and it seems like a reasonable move. I did that in my bank, and there were withdrawal limits imposed on my account, and I think we're going to see more of those. So that is something, but I do think it's a prudent strategy to not have all your eggs in the bank. But then I also believe that the bank, if the bank has mass defaults of mortgages, then we are going to see radical banking reform. And I don't think that they're going to allow people in their time of need to lose essential financial support. So I believe that really we all go down together. And a few of the things that I've been doing, as I said, I did try and get some cash subject to the withdrawal limits, and I'm reducing my exposure to some of the money at a bank that is above the federal insurance, by putting it into money that you can actually own, which is where I think Bitcoin comes into play. And so the Bitcoin, again, this isn't right for everybody. I can't give you financial advice. Everybody's situation is so unique. Some people just need to get the essential needs that they need right now in times of a health crisis. Other people have reserves that they're trying to protect and savings that they're trying to protect in different places. This is not a place for me to give generic financial advice, one size fits all. So all I'm trying to do is give you information so that you can decide what's right for you as you have time to think about during this lockdown, wherever you may be, whatever your situation may be. And so I'm reducing exposure by putting it into Bitcoin. The Bitcoin price had a tumble with the rest of the markets recently. And so I'm really deciding that is, in my perspective, with my situation, the right place to be for me right now. But you've also got to understand that everything your local supermarket is not in a position where they're accepting Bitcoin right now. So you got to be sensible. You got to plan things. Sit down with your family, your loved ones, or if you're on your own, just think through these things and start thinking about different scenarios. I'll try and take the complexities out of this system. And why don't you just let me know what types of topics you'd like me to cover, and things that are confusing to you that I might be able to deconstruct in future videos. And that's what I'm going to continue doing. And, I'm really here to just try and be of service. There's lots of content out there on the health crisis, and I'm listening to experts in their field, and I'm trying to make sensible decisions to figure out what I need to do next. But if I can help you in some way in trying to deconstruct some of these massively complex situations that we're experiencing in this first time in human history, well, not first time in human history, first time in my lifetime, that things like, that I really do believe that we can come out with some really great reforms at the end of this. We can reinvent our financial system. We can reinvent some of the assumptions that really have just taken us to this incredibly insane, world's largest regulated Ponzi scheme that we call our fiat currency banking system. And all I can say is respect to Satoshi Nakamoto, he, she, they, we, whatever. They created something that I believe is going to be truly, truly, truly important for so many people. And, just appreciation to the crypto community for making sure that we got this far. Where now, during these times, people have the ability to own their own money, spend their own money, and we have a counterforce to excessive money creation with something that can't change, has a fixed money supply. And all of the debates that we've had over the years in the crypto community about how to scale it, the importance of it, I hope we can all appreciate that Bitcoin is Bitcoin, and Bitcoin is what the world, needs as a protective measure right now. And this is no time for debating, different, infighting and trying to do that. I understand that, the crypto community at large is trying to improve and innovate these things, but we've got to be responsible during these times. And I'm waffling a little bit, but just appreciation to the Bitcoin community, Satoshi Nakamoto, for giving us this gift that I believe is going to become more important as the world realizes that owning your own money, spending your own money, and having what could be the world's best shot we ever achieve at having politically neutral, sound money is something that the world actually needs. And, shame on anybody that for their own selfish reasons tries to stop something like Bitcoin, giving people the option and choice that they need. And yes, over and out. Retweet, like, share. I'm going to put this on YouTube and Facebook, and please do engage with me. Let me know what you like, and I'll create a video and try and deconstruct some of these things. So stay safe, everybody. I'm at home right now, but if I do go out, I will be wearing a mask. I will be wearing gloves. I will be wearing, protective measures and adhering to social distancing. I don't even care if it's a conspiracy theory, if it's a hoax. All I know is that people are dying, and life is too precious. And so even if I'm proven to be a complete idiot that fell for things that give governments excessive control, then let's just deal with that in the aftermath. Because what I'm seeing right now is, just stay safe, stay careful, and let's do this, people. We're in this together. We all, this is a truly unique time for solidarity, and the world coming together to just really help each other in these times. Show some compassion out there, and if you can help other people, then if this content helps, then please do share it as well, and I'll keep doing that. Thank you. Peace.